Welcome to the RMI Advantage Sales video series. In today's video, we will discuss the benefits of one of our more notable features called Sale Type Lease. RMI specializes in software for the equipment rental, sales, and service industry. We have installations in hundreds of companies throughout the world. Our experience indicates that one of the challenges our clients face is having the ability to process sale-type capital leases for financing equipment to customers. Our sale type lease feature addresses this challenge. When you hear the term rent, it means I'm charging you to use my equipment, but I own it. Oftentimes, a longer-term rental is referred to as a lease. This term lease, however, becomes a sale type lease when there's a pre-negotiated purchase price, and it's highly unlikely that the customer won't buy the equipment. One of the benefits to using a sale type lease is that it's a great way to dispose of used rental equipment. With a sale type lease, the customer is buying the payments, not the price. Therefore, it allows you the flexibility to make a higher profit on equipment you might not otherwise have gotten if you had just sold it outright. And the beauty of it is that you own the equipment until the customer makes their last payment, so that if they fail to keep up their end of the contract, you can simply take back the equipment. One of the heartaches that you face with sale-type leases is having to perform different accounting than you would otherwise for rentals, as you're financing the equipment and need to ratably recognize the interest over the life of the lease. The good news is that the Advantage system handles this type of accounting and provides you with the flexibility to set the terms as you see fit, including interest rate, purchase price, and buyout price. A second heartache that you face is that it's common at some point throughout the term of the lease that the customer decides they want to buy the lease out early. Without a smart system, this can be a real headache to calculate manually. To alleviate this pain, the Advantage system provides you with the ability to print your lease details at any time and, at the same time, have it calculate the buyout as of a specific date. Let's take a look at how Advantage streamlines sale-type leases. Welcome to Advantage, your fully integrated solution for the rental, sales, and service industry. Let's take a look at our sale type leases, which are found in the application area of rentals in Advantage. Now here we have a lease that we've structured for St. Joseph College in Connecticut. On this lease, we've got two tabs. We've got a rental tab, which handles the recurring bills that go to the customer over the life of the lease, and then we have a sales tab, where we've recognized the asset that's being leased as well as any buyout term at the end of the lease. In our example, St. Joseph College is going to be leasing crane number 129. It happens to be a crawler crane, and the lease date started as of 8/1, and the principal amount for that crane happened to be $29,500. We also negotiated that at the very end of the term, there will be a $100 buyout at the end of the lease. As we move to the Rentals tab, let's take a look at how we've structured the lease. Now in this case, we're leasing the crane for an annual interest rate of 6.25%, the principal amount of $29,500. We are sending our invoices to our customers each month, starting on 8/1, for a lease term of 24 months. Each of those 24-month invoices will be for $1,310.78. And this lease happens to have already been in process, and so far we've billed it through 9/30/11. So from this lease, we can see a number of different things. So let's first take a look at the accounting that happened at the beginning of the lease. So we're going to move to our posted documents, and our very first document happens to be the beginning structure of the lease. And let's take a look at the GL entries that were created as a result. What we've done here is the very first time we post any transaction against our lease, what we do is we are recording the transactions relating to putting that piece of equipment out on lease, which happens to do any catch-up depreciation. In this case, it happened to be a used piece of equipment that we were putting out there, and does all of the accounting work for us. Of special interest that I wanted to point out is this piece of equipment over a 24-month period is going to earn $1,958.72 worth of interest for us. That happens to be unearned at the very beginning of the lease, and our total gross investment in this lease is $31,458.72. Now, as we start generating those monthly invoices to our customer, let's first take a look at one of them. So here is our invoice that went out on 8/1 for the very first bill. And we can see that the crane that happens to be leased has been referenced, so crane number 129. And our monthly invoices are going out for $1,310.78 each period. And as each month when we generate our lease invoices, immediately General Ledger is being updated for the amount being posted on each lease. So we're correctly recognizing our receivables, we're reducing our gross investment in leases, we also reduce our unearned lease interest, and we're recognizing our interest income each period. So on our first invoice, we can see that we've recognized $153.65 worth of interest. On our second invoice that went out on 9/1, we can see that our interest is being ratably reduced over the life of the lease. And one of the terrific things about Advantage is that at any point in time you can print a report that shows all of the details about the lease, and it can also answer that burning question, what would it cost if I wanted to buy the lease out early? So from our lease details report, if we move to our options tab, let's say the lease that has currently been billed through 9/30/11, let's say that as of 10/4, the customer has asked us what the buyout amount would be if they chose to buy out the lease on that date. So as we look at our lease details report, we can see the details of the asset that was put out on the lease, so asset number 129, the principal amount being $29,500, annual interest of 6.25%, deal length of 24 months, beginning on 8/1, and our monthly payment amounts. We've had 2 invoices that have been generated to date. We can see both the principal and interest amounts that have been recognized during each one of those terms. And this column here for open amount is recognizing or reporting that the customer has not yet paid any of the lease invoices that have been sent to them. So there's an outstanding open balance on the customer's account for the $2,621.56. Now, as of 10/4, if they wanted to buy out that lease, we can see that the buyout amount would be $27,198.33. This would recognize or is being calculated as the principal amount remaining on the lease, as well as any interest that would have been earned from the first day of October through the 4th day of October. If the customer does agree that they do want to buy out that lease, simply by going to the line button and choosing buyout, if we enter in the buyout date, Advantage will automatically create the buyout amount. It will end the term, so it will no longer be 24 months. It would be the 2 months in this case that we've billed through a buyout date of 10/4. This feature is important to you because it makes it easy for you to process sale-type leases for new and used equipment using proper accounting, and it gives you the flexibility to offer an additional service to your customers to help give you a leading edge over your competition. Thank you for allowing me to show you our Advantage solution and how it can help meet your company's challenges with our sale-type lease feature. If you have any questions about this feature, or any others within Advantage, please contact RMI at 800-252-5011 and ask to speak with a sales representative who will be happy to discuss this with you further. RMI wishes you much success in your business, and we hope that you have a wonderful day.